Dear students, మరియు and working accountants, welcome to my YouTube channel, Smart TallyPrime class. I am Babura from Hyderabad. In the last video, we discussed about the source documents. Those documents means, so now we are proceed to record the transactions. We must have proof of the transaction. Without the proof, how do we know about the transaction? So we must have proof about the transaction. The proof are base document. The proof is in the shape of a document. So the proof or base document is called, source documents. So there are many source documents. With the help of the source documents only, we can record the transactions in the Tally. So there are mainly 7 types of source documents. So that we discussed yesterday. Now we have to proceed further now. So on the basis of the source documents, what to do? How to record the transactions? For that, we have to know about the vouchers in which we are recording. The vouchers in which you are recording. For that, we start with the class today. And one request for you, all the people who have not yet subscribed to my channel, please subscribe my channel and click the bell icon and select all, so that you will get all the notifications for all my videos whenever I upload. I am uploading every day. Okay. And share the channel to all the people, that means to all your friends, and also people who require some accounting training or some accountants already working. If they are working on Tally ERP9, they require the knowledge in Tally, right? Okay. And while viewing the videos, you view or watch the every video till the end. Unless you till the end, if you skip it, you cannot understand the balance topic. Suppose if you skip, again come back and watch the balance. Then only you will understand everything. Okay. And then after watching that, you click the like button, that is thumb button. Thumb button means it is like. So like the video, so that I know how many people are watching and how many people are liking. And then the most important thing is you please post a comment below the, in the comment section, because I can, that is the comments are the communication between you and me, because I can understand how you are receiving and what is the problem you facing. That's all I can understand through the comments. So please definitely post the comment. Okay. Now we will proceed to our subject, and now I share the screen. Now we will go to our topics of discussion, or all the topics which you discussed. I gave in the shape of a list. Later I will give this list also to you, because I am making some adjustment, sending to the later place, bringing forward like that, depending on the necessary. Now, yesterday we completed what is meant by source document and use of the source document in TallyPrime. All the documents we have discussed. And now we will discuss about the recording. For the recording, how you record the transactions and what are the, where you record the transaction, that we will learn now. That is the subject today, topic today. Actually, in every business, in accounting, there is one cycle called accounting cycle. Accounting cycle is nothing but starting from the beginning till the end. What is beginning and what is end? So every accounting cycle starts with business transaction. So what are we going to record? Business transaction. So the business transaction has to take place, and we have to identify the business transaction. So the cycle starts with the business transaction, and we go many steps forward, and at the end is preparing the final statements or final reports, called final accounts, also profit and loss account and balance sheet, and analyzing the profit and loss account and the balance sheet, how the profits are going on, whether profits are increasing or decreasing, what are the reasons, what are the expenses increased or decreased. Like that, we have to analyze the profit and loss account, and then balance sheet, what is our position, financial position, all this. So for this, business cycle is required. Business cycle is, business cycle, it is called business cycle, starting till the end. Now, we will start this, and at the time of previously, in the manual accounting system, this business cycle and the recording starts with journal. That is the first book we record. That's called book of primary entry or journal. So with the journal, the recording will start. But in Tally, it is instead of journal, most simplified way. That is, in the Tally, recording is more simplified, and these transactions are recorded in different vouchers depending on the nature of the transaction. In the journal, all the transactions will be recorded at one place in one book called journal. But in this Tally, there are many different vouchers prescribed for this, and different vouchers are used for recording different transactions depending on their nature. These different vouchers called accounting vouchers. So in the previous one, waste account, there is one voucher. That is not this. That is only payment voucher. For payment proof, we will write the voucher and get the signature of the recipient. That's all. This is called voucher, is recording the transactions in the form of a voucher. Okay, so this is the, and these accounting vouchers we are going to learn today. And what are the different accounting vouchers? What are the different accounting vouchers? And for all the accounting vouchers, there is shortcut keys, and all the shortcut keys are available in the keyboard. The functional keys are the shortcut keys for the transactions. Then for the vouchers, for each voucher, there is one shortcut key. The shortcut keys starts from F4 to F9, F4 to F9, F4 to F9, and two more, they are in F10. They are in F10. So generally, in F10 there are two inside. We have to go into inside. But the F4 to F9, if you click that directly, the voucher will open to record. But in F10 there are two vouchers. We have to go to F10, then select the voucher, then press, then you will get the voucher to record. Okay. So we will now learn what are the different vouchers. These are all called standard vouchers. They are always available in the keyboard. And these standard vouchers we can record, and if you want to make any alterations, you can make changes in these what you call accounting vouchers, and some new accounting vouchers if you want, you can create the new accounting vouchers also. You can create new accounting vouchers also. See, all these accounting vouchers from F4 to F9, they are always available. To press that, voucher will open. And if you open, if you bring forward, if you prepare a new voucher, if you create, in such a case, that voucher will be opened with the combination key of Alt plus function, one function key. Alt plus one function key will be available. With that combination only, we can open that voucher. All the others, 4 to 6, F4 to 9, F9, they are always available. Now we will know about the standard accounting vouchers available in Tally. First of all, I am going item wise, not number wise. I will give the list later. Okay. And then first one is receipts voucher. It's called receipts means receipt voucher. Receipts voucher. So what is meant by receipt voucher? What you return? This is the function key, that is the short key, and you say shortcut key for the receipts is F6 on the keyboard. On the first row there are function keys. So F6 is the key for receipts. So what are we record in the F6 receipts voucher? Whatever you receive from others, whether in cash or through bank. Through bank means check, or through online transactions like net, RTGS, or net banking, through the bank or by check. So these all received through the bank or cash. Whenever you receive cash or through the bank, then that will be recorded in the receipts voucher. In the receipts voucher, all cash and bank payments received. But there is one exception. So when I'm receiving the cash through bank or cash, except one, you should not enter in the receipts voucher. In the receipts, that is cash sales. If you receive money by selling the goods for cash, for cash sales, if you receive money, that will not be entered in the receipts voucher, because for sales there is another voucher. For sales there is another voucher. Credit or cash sales, that will be recorded. That's why except cash sales, all other amounts received will be entered in the recorded in the function key 6, that is receipts. Okay, and then afterwards when we are doing this, then I will show the value, right? And then next one is payments. Next one is payments. The key is F5. We are going backwards. Payments number F5. F5 is the key for payments voucher. Payments is payments voucher. In this payments voucher, whatever you make payment, whenever you make payment, either cash or through bank, just like receiving by cash or through bank. Similarly, when you make any payment in cash or through bank, so that will be recorded in the this voucher F5 payments voucher. Okay, except one. Similarly, similar to receipts, except one. When you are making payments, it will be recorded in this except one. Cash purchases. When you purchase goods for cash, you will pay cash. It is a payment, but it is not entered in the payments voucher, because the cash purchases will be recorded in another voucher. There is another voucher called for purchases. For sales, there is another voucher. For purchases, there is another voucher. So that's why except cash purchases, so we take care cash for purchasing goods, that will not be entered in the payment section. So I will enter in the payment section. Okay, then understand? F6 receipts, all receipts of cash are by bank except cash sales. All payments, all the money is paid either in cash or through bank will be recorded except cash purchases. Then next third one is contra voucher. Third one is contra voucher. So the third one is contra voucher. What is meant by contra voucher? Contra voucher means before this knowing about this contra voucher, see there is one thing like cash. Along with the cash, we have no one more thing, petty cash. What is petty cash? Petty cash means for payment of small expenses like stationery purchase, water, drinking water, stationery, or some other petty expenses, small expenses. They are called petty expenses. The payment is called petty cash. For this payment of the small expenses, some cash will be allotted. That is called petty cash. There is one person, either cashier or some other person, called petty cashier. So you will have that money and you will make the payments for the small expenses. If it is big expenses, either from main cash they will pay, and otherwise they will pay by check. Okay, so there is another one petty cash. So there is cash account also. Cash account is the main account. Main account. So cash account will be there. Petty cash account will be there. So whenever you are making payments or receiving amounts, one the organization itself, because cash to petty cash. So cash amount is paid to petty cash here, to petty cash. The money is not going out. The money is inside itself. Cash account is ours. Petty cash is not ours. We are making the payment. We are making payment. We are receiving payment. So one person is making the payment, head cashier, and petty cash is receiving the payment. So the money is in here itself, in the institution, in the organization. That's why from cash payment to petty cash, and then cash to bank. Bank account is all ours. So if the amount is in bank, it means it is our money only. It is with us. With us. So cash or bank balance, both are mine. So cash to bank, otherwise bank to cash. Cash to bank is cash deposited in bank. Bank to cash means cash brought from bank, or bank to bank, because one bank account to another bank account in the same bank or some different bank. Andhra bank to Andhra bank in the same bank, we have two accounts. So transfer from one bank to another, one account to another account. Or I have account in Andhra bank and the state bank. Transfer from Andhra bank to state bank or state bank to Andhra bank. They are called funds transfer. Funds transfer from one account to another account. The bank means one bank account to one Andhra bank account. Here bank means bank account. So all these are our accounts only. So the transactions take place within the organization. The money is not going out. That's why these transactions, they will be recorded in contra voucher, because when money is going out, cash will be created, paying into the bank will be debited. So both cash and bank accounts are our accounts only. So payment, the person paying the money, that is the person the payer or payee. Payer is the same account, and the payment also, payee also the same. Both are our accounts only. This is simply like putting money from one pocket to another pocket. So keeping money in one pocket, take the money, put to another pocket. It is like that. That is why they are only opposite to each other. They are not going out anywhere. Okay, money is not going anywhere. That is why these transactions are entered in contra voucher. These transactions are entered in contra voucher. Cash only, cash or bank account. So cash to petty cash, but petty cash to cash will not be there. Cash to petty cash, cash to bank, bank to cash, or bank to bank, funds transfer. All these are entered in the voucher, contra voucher, F4. F4 is the key for contra voucher. So F6 receipts, F5 payments, F4 contra voucher. So from we are going backwards 6, 5, 4. Now we will go forward. Okay. So these are the transactions entered in the contra voucher. Next we will go forward. Next here also. Coming back. Next one. Purchases. What is meant by purchases? Purchase means purchase of goods only. Purchase means purchase of goods only. Goods means the articles or any material purchased for resale only is called goods. For use in the office, for use in the business for a long time, it is not called purchase. It is not regarded in purchases. It is called an asset, asset or property. That's why only purchase of goods. Purchase of goods means for to resell the goods. That is called. So purchase of goods only will be entered in the purchases voucher. This is the key is F9. Purchase voucher is F9. So in this purchase voucher, we will enter both credit purchases as well as cash purchases. When we purchase cash for cash, we are making payment. So in such a case, we should not enter payments voucher. Payments voucher we should not enter. So all the payments will be entered in payment voucher except cash purchase, I told you. So cash purchases and credit purchases both are entered in the purchase voucher. He is F9. Okay. Then the same opposite. Sales voucher. Sales voucher is the key is F8. F9 and sales is F8. F8 means when you sell the goods only goods. When you sell the goods only, that is goods meant for resale. When you sell them only, we will enter the sales voucher, but we will enter both credit sales as well as cash sales also. We should not, when we sell the goods, we get the money. We should not enter in. We should not enter in. We should not enter in receipts voucher. We should not enter in receipt voucher. We have to enter the sales voucher only, either cash sales or credit sales. That's okay. So till up to that, see how many 6, 5, 4, then 8, 9. In the middle there is 1 7 that I will tell you, and that will go. Then we go. Here purchase and sales. See, when you purchase the goods, so sometimes due to some problem, if the goods are not as per our quality, our required quality, or the quantity is not correct, and the goods are damaged, or for any reason like that, we will sometimes return the purchased goods. So goods purchased, the goods will be returned. So returned by all the goods, total goods may be returned, or some part of the goods may be returned. There are some purchased some 100 kgs or some material. Out of the some 2 kgs, it is damaged, not that. Or they send different goods, 2 kgs. So the 2 kgs only we will return back to the supplier. All the goods we ordered for some material, they send some other material. So all the goods is not useful for us. So all the material, total purchases will be returned. So when you return the goods, that is when the goods purchased are returned, they are called purchase returns. Purchase returns, the name is purchase returns, but the voucher name is debit note, because when we purchase the goods, the supplier is a creditor to us. So we will credit his account, isn't it? Purchase account debit, for that in supplier account, supplier means seller. Seller account credit. So we are creating this account. Now the goods are giving back to him. The sending back. Sending back means the account will be debited is the receiver. So his account is to be debited. That is why we send debit note along with the purchase returns. When you are purchasing goods, the other person will send the invoice to us. Similarly, when you are selling the goods, along with the goods, we will send the invoice, sales invoice. We will send. Similarly, along with purchase returns, we have to send the purchase returns. The buyer, when returning the goods, along with the goods, he has to send the document called debit note. That is showing the name of the person that we will learn later, name of the person and the reasons for the return, and we will mention everything, what is the value of the goods, and the GST charged on that. That also will be reversed. That is also to be entered for this. Then how much goods we are returning for that goods, we will write the we will show the GST also. If the whole material is rent, the whole GST will be charged. Otherwise, part if you return, then on that part only we will charge the total. We send the details to the supplier in the form of the voucher called debit note. For this debit note, I told you this is not visible. 4 to 9, F4 to F9 only will be available in the keyboard. That is why for this one, this is not available in this. For that, Alt plus F5 is the key. For debit note, Alt plus F5. This will be available. See here, up to 9 is not available. There is another F10. In the F10, all the special vouchers like that, special vouchers as well as some vouchers we create. We create some vouchers for our necessity. Depending on the necessity, as per our requirement, we will create some new vouchers. All those vouchers, all these will be available in F10, which is called all other vouchers. So these are the vouchers, F4 to F9. What about the other many vouchers? If you require, all other vouchers will be placed in F10. That we will learn later. Okay. So in the F10, all the return, other vouchers will be that are all special vouchers. Okay. So this is a special voucher. So this will be available in F10. F10 it is available, but F10 it is available, but similarly directly all the F5. In the F10 also it will show. In the F10, we will go, we can see all the other vouchers. So for each voucher, again, there is a key. To view all the other vouchers, F10. In that F10, there are different keys. So for that, the debit note, all F5 is the key for the debit note. Similarly, sales returns. So same thing, the purchase returns, the person purchased the goods, sent back the returns to the goods to the seller. Here, sales returns means the seller is selling the goods. So if the goods are returned by the buyer, the seller will take it, he will see the goods and he will see he will send debit note. The buyer will send debit note. He will see the debit note, what are the reasons for the return and everything he will say. He will accept the goods as correct. The reasons he will accept. Then it is called, the sold goods are returned back. It is called sales return. It is called sales return. Goods sold once, they are returned back. It is called sales return. So when you sell the goods, we are debiting the other party. The customer or the buyer is buying from us. His account is debited. Sales is credited. What account is debited? His account is debited when we sold him. So when the goods are returned back from him, his account is to be credited. We have to give back the money. So his account is to be credited. That is why the voucher is called credit note, informing that we accepted the reasons you gave. Okay, we are creating your account. Like that, we will mention in the note and we will send that credit note to you. First, along with the goods, the debit note will come. And after that, the seller will send a credit note, creating his account. He will send the credit note to the buyer. For that, the voucher, that is voucher is credit note. The short key is Alt plus F6. Alt plus F5 is for debit note, purchase return. Alt plus X6 is for credit note, sales returns. See, this credit note is issued not only for returns, that is debit note, not only for purchase returns, similarly, credit note, not only for sales returns, for some other reasons also, similar reasons. So that we will learn. When we are learning, each one separately we will learn and we will see in the tally how to enter all these we will see. Then we will understand, we will know. Then I will discuss what are the other reasons also. What are the other reasons also? Because not only goods returned, sometimes I will tell you now itself. Sometimes the seller will give, so don't return the goods. If there is any difficult, I mean any drawback or any problem or any thing in the quality is not good, then what you will do? So don't return the goods. I will give the price, I will reduce the price. Or I will give some discount on the total value of the goods. Like that he will do. In such case also, the seller will send the credit note to the seller or buyer. He will send the credit note. For example, your account is dating. I am dating your account. So with so and so discount. And 10% I am reducing the price. So you should not cancel the voucher, I mean sales bill, and again we should not raise the sales invoice. Once it is recorded, it is recorded. Now we have to increase or decrease the value. So to decrease the value, the credit note will be issued to decrease the balance of the debtor to issue credit. This is one. Reducing the price or giving discount. Sometimes, yeah, that is okay. Sometimes, okay, this is the thing I will tell you again. Similarly, the purchase person, that is the buyer, when the seller accepted and he said he will do some discount or something, he will not return the goods. Just only he will reduce the price. So he has to reduce the balance of the seller, then he will issue the debit note. In the case of purchase returns, the debtor or the buyer will send the debit note along with the goods, then the creditor will give the credit note. In the case of these things, both are same. In the case of these things like any problem in the goods, reducing the price or discount, then the seller will give the credit note first, then the buyer will give the debit note. He will, okay. And then there is another one. Sometimes, I told you, purchase returns or debit note will be issued by the purchase returns means buyer. Buyer will do the debit note, seller will do the credit note. Sometimes, seller will do the debit note, buyer will do the credit note. Because sometimes if the buyer, I told you in the case of bill or accounting or bill or invoice in the source documents. So whatever it contains, all the details, and at the end it will contain the terms of payment also. You have to pay the amount by so and so date. Otherwise, who charge interest at the particular date? Isn't it? In such a case, if the buyer did not pay the money within the due date, then the seller will charge interest. You charge the interest. In that case, he will issue a debit note. Seller will generally issue credit note for the sales returns. But for this interest, to increase the account, he will give seller also will issue a debit note because debtor is also debit balance. His account is to be increased now because of interest, which is to be increased. So his account is to be debited again. So he will issue debit note. Generally, buyer will issue a debit note, seller will issue a credit note in all the cases except this. In the case of interest, then seller will issue a debit note, buyer will issue a credit note. Understand? So this is about the purchases, sales, and purchase returns and sales returns. So F6 receipts, F5 payments, contra F4, and purchases F9, sales F8, purchase returns or debit note Alt F5, credit note or sales returns credit note Alt F6. Okay. So up to now, see 4, 5, 6 completed, 8, 9 completed. In the middle there is 1, 7. That is the last one. The last one is journal voucher. Journal voucher. It is simply called journal voucher, nothing but this is the journal of the original manual entry. In the manual entry, we are recording in the journal. We are recording all the transactions we are recording in journal. Then it's called only journal. There itself we learned about subsidiary books. Depending on the transaction, nature of transactions, we provide different books with purchase books, sales books like that. In that, the last one is the last one. Nothing, any transaction cannot be recorded in all the other books. They are called books, they are not vouchers. In all the other books, that is to be recorded in the journal. So in that case, this is also becomes one of the subsidiary books. That's why it is called not journal proper. It is called journal proper. Here in this Tally, this journal voucher is nothing but journal proper. That is F7 is the key. F7 is the key. Here we record all the transactions which cannot be recorded any of the other transactions, other vouchers. Here, F4 to F9, except 7. 4, 5, 6, 8, 9. We are recording. We discussed what is to be recorded in these vouchers. So many transactions which cannot be recorded in these vouchers, that is to be recorded in the journal voucher F7. So here, understand now. So which can be recorded and which cannot be recorded in all other vouchers, they should be recorded in the journal voucher. So for example, I am giving what are the entries made in the journal voucher. See here, opening entries. Opening entries means at the beginning of the year, you have to take all the opening balances. So simply I told you, I take the opening balances. But in the manual system of Islam, opening entries means the entries brought forward from last year to this year, you have to make the entry. Simply, I told you, you have to take the opening balances. We are taking all the opening balances, debit balances, credit balances. But for that, there should be an entry in the journal. All the debit balances which he entered will be shown on the debit side, they will be debited, and all the entries which are all the balances, opening balances, which are credited, which are shown on the credit side, they will be credited, both will be tallied. Then only the balance sheet will be tallied. Even if you take the opening balances, I will tell you when you open the TallyPrime, when you open all the opening balances, on the right side upper part, it will show opening balances, debit, credit. So it will show debit amount, credit amount. If there is difference, it will show the difference. So that should be tallied. That is, debit and credit should be equal. If you the opening balances we entered are correct. For that, we wrote the entry called opening entry. It is called journal. It is entered in the journal. Next, number 1. This is actually not required. Rectification entries. Rectification entries actually in the manual accounting. When there is an error, we should not erase it again, right? We should not overwrite that. We should not erase that. That is why we have to rectify the error through by passing another entry. So that rectification error is entered in the journal. That is journal proper in the manual accounting. But in the tally, hey, we need not pass any rectification entry. Wherever there is a mistake, just to enter the correct amount. So that will be rectified. All that's all. There will be no overwriting, nothing. The whole amount will go. Suppose for 500, we entered 5,000. So if you go there again, enter 500. That's all. 5,000 will be there. Only 500 will be there. So this rectification entries generally is not useful in tally. Then transfer entries. Transfer entries mean sometimes we transfer some amounts from one account to another account. From one account to another account we will transfer. In such a case, which account is debited? When there is one debit balance, that account is credited and debited in another account. So the debit and credited means this account will be closed, this balance will go to this is debit side. This debit will go to the debit of another account. This is called transfer entry. Transferring one account to another account. Okay. Yeah. Closing entries. Closing entries means in the manual accounting when I'm discussing about the fundamentals, at the end of the year, we will prepare the profit and loss account and balance sheet. How we are preparing in the profit and loss account? All the nominal accounts, including purchase and sales, with returns. Purchase and sales, less returns. All these are entered in the profit and loss account. Simply we are entering, actually it is not the thing. We have to write entry for that. See, all the expenses will be written on the debit side of the profit and loss account. Means profit and loss account is debited. So all the expenses are debited in the profit and loss account. So debit profit and loss account from the total amount, and all the account expenses accounts will show debit balance, which is to be closed because we are transferring to profit and loss account. That's why all the expenses account will be credited, so that all the expenses will be closed. So all the expenses will be closed by rating the expenses individually, and the total amount is debited to profit and loss account. So all these expenses will go to the debit of the profit and loss account. Similarly, credit. All the credit balances, that is nominal accounts only. All the nominal accounts which are showing credit balances, that means incomes including sales. All the incomes will be showing credit balance. All these accounts will be debited and profit and loss account will be credited. So these accounts will go to the profit and loss account. So all the nominal accounts will be closed because Other accounts means real and personal accounts will be showing the balances. They will be taken to the next year. These nominal expenses, nominal accounts will not be carried forward. The difference between nominal accounts, that is incomes and incomes difference, that difference is called as profit or loss. That is taken. Taking all the accounts to next year or taking the net difference also the same. So by taking the net difference called profit or loss, that will be carried forward to the next year or that will be transferred to the owner's account. That will be transferred to the owner's account. The real and all the nominal accounts are closed. These are called closing entries. We are closing the books, that is nominal accounts. And then adjustment entries. What is meant by adjustment entries? Adjustment entries means, you know, if you are a become student or did become, you will understand all this. Adjustment entries means the principle is every year the expenses or incomes for that year only you have to take into account. To know the profit or real loss, we have to enter only that. We have to take into account the expenses and income of that year only. For next year income, you cannot take in this year. Or next year expenses, you cannot take in this year. Last year expenses, you cannot take in this year. So each year, the expenses and income related to that year only should be taken into account. Okay, so at the end of the year, the expenses, some expenses occurred for that period. For this year, there is expenses occurred, but the expenses still not paid. Cash is not paid. There is expense for this year only, but it is not paid. Then if it is not paid, the expense is not paid. It is called outstanding expenses. Outstanding expenses. So these outstanding expenses is to be taken into account. So you pay the money, rent account debit, you are paying cash credit. But if you do not pay, you will not pass. But you have to pass the entry. Rent account is to be debited. Rent account is to be all the expenses which are still not paid also to be debited because they are expenses related to this year. Debit the expenses and credit, you are not paying cash. So cash account cannot be created. That is what credited to. Credit means a liability. It is created to another account called outstanding expenses. So all the expenses not paid. For example, rent not paid. Salaries, for example, 30% is the amount salaries payable. But every company generally they pay in the next month after first, second, some people they pay on 10th or 5th. That day they will pay. So on the 31st of the month and at the end of the year, last March 31st, we have to take these salaries are expenses, you have to enter and created to expenses payable, salaries payable, outstanding expenses. So all the amounts which are not paid, due but not paid, they are debited to the concerned, the respective expense account and created to separate outstanding expenses account. Similarly, incomes. Suppose sometimes we will pay for next year also we will pay this year. For example, insurance. So for insurance will be paid for 1 year. Insurance will be paid for 1 year. We paid on 1st July. We paid on 1st July. Up to year is 30th June of next year. So 6 months in this year, 6 months in the next year. For the whole period we paid. But the expense is only for 6 months. Other expenses are for next year. That is why the expenses paid for next year called, they are called the expenses paid in advance. They are paid in advance or prepaid expenses. Paid in advance, previously paid. So it is called prepaid expenses. The prepaid expenses should be deleted from this year expenses. So when you paid the money, insurance charges you will write the total amount. But at the end of the year, from that half of the amount for next year, it is to be credited from the expense. The expense account is credited and it is debited to prepaid expense. It is an asset because already we paid in advance. It is asset first. Payable means liability. Or paid in advance means this is an asset. So it is to be debited. Asset is debited. Expenses paid in advance and the expense account will be credited. Similarly, incomes also that is not the problem now. So here these entries are called. Further we have right entry. It is called adjustment entry. These are adjusting the entries, adjusting the incomes and expenses. Then checked dishonored. Checked dishonored means actually it is not a receipt, it is not a payment, whatever it may be, it is not sale or purchase. It is check is bounced by the bank. That is right. This is recorded in this one, and then depreciation. What is meant by depreciation? So if you have an asset, fixed asset, so we are using in the business. So every year, for using the whole year, for using the asset for the whole year. At the end of the year, their value will go down. It will not have the same value. Their value will go down. So that it will be reduced. The reduction or diminution in the value, the diminishing in the value or the reduction in the value is a loss to us. It is called depreciation. The reduction in the value, the fall in the value of an asset, fixed asset, is called depreciation. It is a loss to us. So there is no account plan. At the end of the year, you have to see what is the rate of depreciation. There will be some rates as per income tax act. As per according to the rate, what is the reduction in the value, depreciation in the value of asset. So that depreciation account is to be debited. Depreciation account is to be debited, and the asset account is to be created. At the end of the asset is reduced. So at the credit asset account, depreciation account is to be debited. It is a new account to open. So this will be transferred to profit and loss account in the closing entries. This is account is open now. This is transferred to profit and loss account along with the closing entries in the closing entries, because it is a loss. Expenses are losses. So this is called depreciation. Sometimes the sum asset will increase, the price will increase. For example, land. Always land will never fall. The rate will never fall. Always land will be increasing the rate. In the price will increase. So if the price is increasing, the value is increasing. It is called appreciation. This is called depreciation. Depreciation, that is called appreciation. Increasing. So in the case of appreciation, it is also to be taken into account, because the value is increasing. It is a gain. It is a gain to us. You credit all expenses, debit all expenses and losses, credit all incomes and gains. So this is appreciation is a gain. Gain is to be credited, appreciation account, and the value is increasing. So asset is debit balance. Again, you have to debit to increase that. So debit asset account debit, and appreciation account credit. In the case of depreciation account debit, asset account credit. So this appreciation also transferred to the profit and loss account within the closing entries. It is transferred to the credit of the profit and loss account. It is a gain. Okay. And then next one is, I told you, in the purchases and sales, the purchase vouchers and sale vouchers, these vouchers, we have to enter only goods, whether cash purchase sales or credit purchase or sales, only sale of goods, sale or purchase of goods should be entered in the purchase and sales vouchers. Suppose if you purchase a fixed asset or property, it is a purchase, but it is not a goods. That is why it should not be entered in the purchase account. Similarly, you sell furniture or any asset you sell, it is not goods, so it should not enter in the sales picture. In the sales voucher, it is not entered. But why did it enter? Then you sell or purchase an asset on credit. If it is purchased or sold for cash, then it will be entered in the payments and receipts vouchers. When the asset is purchased, we will make the payment, it is entered in the payment section. When the asset is sold for cash, so we will get the cash, it is entered. Okay, so goods purchase and sale should not be entered in the cash purchase of goods or sale of goods should not be entered in these two. But purchase or sale of expense and assets for cash purchase or sale, fixed assets, it will be entered in the receipts and purchase voucher. There is cash sale or purchase of assets. If the purchase of assets or sale of assets or credit, that is credit purchase or sale of asset, where you enter credit purchase, which is not purchase, it's not enter. You cannot enter the cash book, and you enter the purchase receipts and payments you cannot enter. And it is not entered in the purchase or sale, it's not goods. That is why this purchase, credit purchase or sale of assets or any other property, it will be entered in the tally. You entered in the journal voucher as 712. Another one, drawings of goods are other assets also. Goods are there. So drawings of goods are other assets. Goods are other assets means the owner, proprietor or partners, meaning owners. The proprietor or partners, when they are giving capital to the business, they are taking it as capital. When they withdraw from the business, if they take from the business, any drawing from the business, this is called drawings. These drawings can be, they can take cash, or they can take, suppose there is a computer, it is old, we are planning to set it up. That computer, a partner or a owner, he can take the computer for his personal use. So he's taking up asset. Sometimes the goods which the business is dealing, the goods are required for his household problem, for his domestic use also. In such case, we can take the goods also. For example, medical shop, the owner will use all the medicines from the shop for his personal use. Like this, withdrawal of drawings of goods or any other asset by the owner or owners for personal use, it is to be recorded in the goods only. Suppose if the owners withdraw cash, then withdraw cash means business is paying. It will be entered in the payment source of the business. When the owner is bringing capital, it is receipt voucher. When the owner is withdrawing cash, then it is payment to the business, payment voucher. But in the case of withdrawal by the owner or owners of goods or any asset, then for personal use, it is entered in the journal voucher. Understand? So these are the vouchers. All these items are entered in the journal vouchers. Journal voucher, it is F7. So from here, F4 we started. F4 contract, so in the number wise is different. F4 contract, F5 payment, F6 receipt, F7 journal voucher, F8 sales, F9 purchase, and all F5 is debit note, all F6 is credit note. That will be the answer. So these are the accounting vouchers which are available in Tally to record the transactions. Okay, so this is the topic for today, and in the next video, so okay, these are the vouchers are there, but in which voucher we have to record, that is each transaction we have to verify, and depending on the nature, we have to select and enter. We have to select which voucher we have to enter, and we have to make the entry in the particular voucher. That is, we have to select and enter in the correct voucher. We have to select and enter in the correct voucher. So in the next video, we will know about it, and we will take one example also of problem. We will do many transactions. So by analyzing the transaction, we have to decide which voucher we have to enter. That is in the next class. That is in the next video. Okay. So I am telling you many times, please subscribe the voucher, subscribe my channel, share the channel, and watch the video till the end. Everything repeated. Okay. And then you have to learn. If you learn and follow all my videos in a systematic way, I am making the videos in a systematic way. First one after two, then two, then three, then four, like that. You have to follow also in the same order. Otherwise, you will not understand. So then, if you want to become expert, you have to gain expert knowledge, and you have to become a full-fledged accountant. Then you have to follow in the same order, and don't skip any video. View all the videos, and then you gain full knowledge. So with this, we stop our session today, and wish you all the best, and wish you happy learning. Okay, thank you, and we'll meet in the next video.